We think that our user base is like, once DeFi matures a little more, they're the natural users for this outside of crypto speculators. So if you think of like, if you hold cash USD in Caracas and you want to get interest on it, it's basically impossible. If you're holding RSV and you want to be able to get interest on it, doing it through like Aave or Compound makes a lot of sense. And I mean that, and basically people there hold the dollar as an investment asset as is without expecting any interest. And then imagine if they can basically hold this super dollar that is sovereign and they're getting interest on it. Like that's pretty appealing. And, in addition, like as the sort of Uniswap world matures and there's some kind of safer assets, it means that if you're holding RSV, you could invest in a bunch of other assets without going through any sort of KYC AML process, without interacting with an intermediary that views like some of these markets as high risk.
Layer 1 is a podcast and community dedicated to helping you master all things crypto. We'll be bringing you the best interviews with project executives, technical analysis for trading of the most popular cryptocurrencies, and insight into what's actually happening behind the scenes.
As you join us each episode, you're going to hear about tokens, fundraisers, investments, and even crypto conspiracies. But please remember that nothing we say should be considered financial or legal advice.
Come join us on this journey and welcome to Layer 1.
All right, good morning, good evening, good night. We've got another episode of Layer 1. This is going to be a great episode. You guys have been clamoring at the bit for some DeFi information, so we definitely have a good one for you guys today. I'm still, not at home, not at the humble abode, but I am giving you all I can do on this vacation that I'm having. But I want to talk to Dima and I want to get to our guest. So Dimitri, what's going on today, man?
Yeah, man, super excited today for the interview that we have. It looks like Q's still in the bunker. He's self-isolating on the beach, I guess. But yeah, we're back again. Obviously, exciting interview. We talk about onboarding people into crypto from these countries that they're distressed and so on, right? And the guest that we have here can talk more on how they get involved on the ground in expanding crypto and giving options to some of those people. So Q, who do we have today?
Yeah, we have Charlie Smith, business development for the Reserve protocol. I'm going to let Dimitri, kind of run point here. Reserve is obviously doing everything you talked about. But Charlie, how you doing today?
Hey, great to meet you both. Doing really well. Great to be here and happy to talk Reserve.
Yeah, absolutely, man. We're going to have a great conversation. Like I said, I'm going to sit back and let you and Dimitri riff a little bit. So before we get into Reserve and everything you guys are providing as far as a stablecoin and a payment system for these distressed countries, at least to start out with, what got you into tech? What got you into crypto? Let's touch on that before we move into Reserve.
Yeah, sure. I think for me, I've always had a long-standing interest on the more economic front. And I think, years ago, I would have thought I'd have ended up being a professor or, more going down like an econ PhD sort of route. But I just got more interested in the sort of praxis of it and sort of being more of an actor in that space as opposed to an academic. And yeah, so I basically came to the space with a pretty big interest in sort of Austrian economics and came at it from a sort of intellectual standpoint. I'd worked as a management consultant for years before joining Reserve. I'd also spent some time at The Economist, just as an editorial assistant, doing research on fallout from 2008 crisis, and then also doing a lot of research on labor unions in the United States. And anyway, so I worked as a management consultant for a couple of years, then switched over to the crypto space in maybe, I think, 2017. And I've been at Reserve for 2 years, really enjoying it.
Yeah, so you guys started in 2017. Kind of give us that genesis story of how you kind of either met the team or maybe, just joined Reserve, and why Reserve, why stablecoins. Yeah. We know DeFi has been a huge sector in the past couple of years, or at least past couple of months. But what about stablecoins back then kind of drew you in? I know we had Tether back then, we had some other large stablecoins, but really only over the past, I would say probably 6 months, 12 months, have we seen them truly take off and gain at least the kind of zeitgeist of the entire community. So why Reserve and why stablecoins back then?
Yeah. So I think, everyone in the project and the sort of spirit of the organization in general is very thesis driven. So we have a perspective on how we think the space is going to play out. that's both on, you know, a technology layer, like token economic layer, in terms of our like strong belief that conviction that stablecoins are going to lead the way in terms of mass adoption in the space. And then we also have a thesis around what sorts of users are going to want to leverage stablecoins for day-to-day transactions, savings, et cetera. And basically, I shared that thesis really strongly when I was looking at the space independently, kind of throughout 2017, 2016. It occurred to me, and it was similar thoughts that occurred to our founder, that that basically, without a monetary policy that allows for relatively stable purchasing power, these tokens are going to be really hamstringed in the ways that they can be adopted. And so, yeah, so I basically was looking at the space and thinking, you know, what seems like it should win should be something that approximates dollar parity, that's the most demanded currency in the world, and that there's this huge amount of demand for dollars that is pent up, that people, you know, the majority of cash USD is held outside of the United States. Many people are holding their wealth in cash USD without access to any sort of like digital USD equivalent that they can, you know, use to leverage financial services and make cross-border transactions, et cetera, and just enjoy like general convenience that we all expect from a digital banking experience. So I basically felt as though there was this sort of macro story around, you know, pent up dollar demand. And then that there was also a story within crypto that, you know, there were all these attempts at real world adoption, but it felt as though the lack of coins with, you know, viable monetary policy was really holding back the space. Got really excited about it. Ended up, I knew someone who kind of was a friend of an investor in Reserve, and I reached out saying I was looking for this sort of exact thing. I was like, I think, you know, decentralized stablecoin targeting emerging markets, you know, is the play in this space in the long run. And they were just like, oh, I just invested in something just like that. So I flew out to New York. I was in Texas at the time. Flew out to New York and met with Nevin and the rest of the team and hit it off. And I've been with them ever since.
It's interesting to hear that story about stablecoins because, you know, back in the day during the ICOs, you know, there were a lot of tokens that were trying to do this adoption thing, and people would have to get this token and they can, you know, transact in that token. But the volatility overall of that token kind of turns a lot of people away. And then we had, you know, the stable coin kind of came through and it was like, okay, listen, it's pegged to $1. So there's, you know, there's no volatility there and it gives you exposure. You can transact and it was fantastic. Back in, you know, 2017, the main concern was about the Tether, right? So Tether had some things going on and everybody was kind of thinking it's kind of shady and right. Didn't know if there was a reserve actually there to back up each Tether, all this stuff. But, you know, now we have, you know, multiple stablecoins that are in the market right now. What you guys are doing, from what I understand, you know, Reserve is a basket of these stablecoins that are out in the market right now, right? So what's, you know, what is the reason why you guys decided to do a basket of stablecoins rather than maybe, you know, just like a single stablecoins that we have right now? What is the benefit of having the basket rather than, you know, just let's say USDC as a single stablecoin?
Yeah. So I think maybe a good starting point here would be looking at the way the most conventional stablecoin models have emerged. So Tether, and, you know, what were the sort of design considerations there? And then how has the conception of what stablecoins are going to be used for shifted, and how might that have changed the sorts of design choices you would make if you had known where stablecoins were going to go? So Tether started really as just a sort of regulatory arbitrage play for crypto exchanges that, you know, if you were to go back 2017 and prior, no one wanted to bank a crypto exchange. I mean, we probably all remember using exchanges like GateHub or something where they felt like extremely off the beaten path, and it was really difficult to on-ramp fiat into these services. And so, yeah, so Tether emerges, they get bought up by Bitfinex, and they get kind of given this massive amount of distribution, and they take off really unexpectedly as a sort of banking substitute for crypto exchanges. And they spread and they're used within those services. And what has happened since is that, you know, it turns out that this is not only a great play for exchanges, there's lots of people who want to make peer-to-peer transfers. They want to, you know, make cross-border payments. They want like a sovereign bank. They, you know, are looking to store their funds in different ways. And then it kind of turns out that, you know, they've been used for things that they, you know, weren't expected, that the Tether original creators probably didn't expect at all. And so, with that initial exchange use case, it may be that a centralized stablecoin where dollars are held in a bank account off chain is, fairly, appropriate, at least at that time it was, given that, basically the stablecoins are being used for like pretty innocuous purposes. It's just like a simple utility within a set of crypto exchanges that like the wider world doesn't really care about that much. It's like very much its own particular neighborhood that regulators kind of ignore, and the general public isn't that interested in either. So the shift we've seen is that stablecoins have sort of stepped out of that niche, and now there's a huge amount of excitement around the role they could play in, say, emerging markets or cross-border payments in general. And as soon as you step out into that wider world of payments, you're hitting into the whole, like the kind of full regulatory apparatus that controls all of those sorts of payments. So if you're facilitating cross-border money flow, if you are acting as a sovereign bank for people, you're immediately going to come under a lot of regulatory scrutiny. And it hasn't happened yet, but we think there's definitely a wave of regulatory scrutiny coming. And so we basically built with that in mind, that we think that models like Tether or USDC, while they're great, they sort of amount to running PayPal, but only doing KYC AML on a tiny fraction of your users. And all of the secondary trading that goes on is sort of like strangely unregulated. And you have to think like from a regulator's perspective, how is this tenable? How is it we have services like PayPal that we regulate really stringently, and then we have services like USDC that are offering a very similar service, but they kind of operate in this gray area. There's definitely a central issuer, just like there is with a PayPal dollar, but they're given a lot more leeway. So we think that this is like an equilibrium that we're in now that is probably not tenable in the long run. It's hard to say how much it will shift, but we think it's definitely going to shift in the direction of being more controlled. So for that reason, we built Reserve as a piece of open source software that sits on top of lots of other tokens. So today, the best thing to do is leverage USDC, Paxos, TrueUSD, because they're basically what people want. They want a dollar token, and we can basically pool those together to diversify a little bit of the tail risk that any one of them implodes. The kind of longer term vision is more interesting, I think, which is that basket can be completely flexible. We could have 50 plus different assets in there of different types. And so the way to think about it is that over the course of, say, the next 50 or 100 years, the landscape for asset-backed tokens is going to change a lot. We think that it's a great model for providing stability, stable purchasing power, and we can sort of adapt with it. So if USDC goes down, we use something else in the future. For now, the best thing to do is to use USDC though, because we're sort of in this weird limbo state where everything's permitted.
If any problems happen with USDC, does that not lead to any actual issues with Reserve because you have that within the pool? Does that not expose you to maybe more risk when you add those different things to the pool?
Right. Yeah. So it basically, if you're drawing on these different tokens, you are to some extent exposed to the risk that they face problems. But our goal basically is over, the medium to long term is to diversify that basket significantly. So today we're exposed 1/3 of all RSV is backed by, if there's X amount of RSV, it's X divided by 3 USDC is backing it. The other 2 tokens make up the other 2/3. And so basically today, yes, there's some exposure there, but we do have the ability to rebalance. So let's say USDC came under regulatory, constraints, and the US government said, okay, everyone, we're not going to allow this to exist anymore. The kind of history on this topic, if you look at like e-bullion and e-gold in the past, is that typically the government gives a window where they say, okay, you have like 3 months to redeem your USDC. And then, this is over. We're winding it down. We don't want to hurt random consumers, but you got to get out of it. In that event, there's not really a hell of a lot of risk for us. So, basically we'd be able to trade out of USDC. Many people would go and redeem the USDC. The system slowly winds down, and we would trade into some new asset. I think that's, yeah.
So the way the Reserve works, kind of just so we can break this down in a basic way. So you have 2 tokens, right? You have the RSV, and then you have RSR. So RSV is the stablecoin, and RSR is the fluctuating one, right? What is the difference there? What is the purpose of the fluctuating, RSR, compared to the RSV that's the stablecoin?
Yeah. Good question. Yeah, and I feel like I'm maybe assuming that people have a little more context on this than they do. So let's kind of start with the basics here. So RSV is a decentralized stablecoin. RSR is the governance token, and the way to think about it is that RSV is a product for us. It's the thing we want people in developing countries and elsewhere to use to save and transact with. And then RSR is the way of capturing value in that system. So RSR it will eventually play a governance role. We're kind of bearish on the state of decentralized governance right now. We think, like, practically speaking, it's going to take a little time to get there. So there's no governance role for the token at this time. But basically the way it functions is that RSV can generate revenue over time. So it can generate it through a transaction fee, which is currently set to 0. And we don't have an intention of increasing that at this time. And then also on the collateral token assets, we could generate some yield, either if those assets are appreciating in value, if they're not USD stablecoins in the future, or even if they're stablecoins, we may be able to use some DeFi lending services to generate yield on the collateral. And that will basically generate some excess RSV because basically it will generate some basically excess funds, which can be used to buy and burn the RSR through an arbitrage mechanism, whereby RSR holders are basically buying these sequestered funds in exchange for RSR, and then the RSR is burned. And so the idea is that if RSV is being used a lot, if it has a high velocity of money, if there's lots of fees being collected, if there's a large amount of yield being captured on the collateral assets, then you expect RSR supply to be deflationary under those conditions. That's what we would expect. And so that's what makes it kind of an interesting asset to hold.
Gotcha. Yeah, it is interesting. I was reading how, there's this arbitrage available there, in case the RSV goes higher than $1, then you have like the ability to buy with RSV for $1, and then you can kind of close that arbitrage in there. So that's super interesting. So yeah, thanks for explaining kind of like the technical side of it. But let's get into exciting stuff like the countries and struggling countries that we talk about all the time. Can you briefly mention something about regulation? Often what we see with some of these countries like Argentina, some African countries, where when people hit like the hardship, they tend to turn to the dollar because their local inflation is going out of hand, and they gotta preserve their value. But oftentimes we see countries kind of clamp down on that, and they prevent the outflow of their local currency into US dollar, which makes it difficult for people to preserve that capital, and essentially holds them as a hostage in these hostile economic times that they're experiencing. And if the people still end up, using maybe some alternatives, or where, you could say like Bitcoin could be one, but, really, we haven't seen really that many on-ramps. And if there are on-ramps there, they tend to charge a huge markup for those people to get in. So, when it comes to stable coins, I think they offer, a significant value to these type of people, but we often see, again, governments kind of clamp down on that availability of US dollar purchasing from those countries, because they don't want their local currency to pour out into the dollar and essentially continue to devalue their local currency. So, what is your experience? You guys been kind of involved with some of these countries, and what is your overall kind of experience with the regulators on the ground there? Are they okay with having you guys promote reserve, or give an option to some of those citizens to use reserve, to preserve some of their capital?
Yeah, so the situation's really market dependent. Like the array of equilibriums that different markets kind of establish around capital controls, their attitudes toward cryptocurrency, even the nature of financial services in the country, whether cash or digital kind of bank transfers are favored. These all kind of affect what sort of reaction and what way we're able to execute in a given market. So in terms of, our approach, so, you can expect a government reaction to be pretty varied. And our basic approach is to be maximally compliant while also being maximally censorship resistant. So, in all of our dealings, with the app and the stablecoin, we endeavor to be fully compliant with U.S. law and then with local law as well. But U.S. law being kind of the priority. And then from a censorship resistant standpoint, we also basically operate in a manner where there's no single reserve entity that's ever executing on a go-to-market strategy in a given country. So this is mainly a fiat on-ramping issue, but basically if you look at Venezuela, we work with like a large number of parties that help on-ramp local currency into RSV. Like people want to make that trade both ways. And this is basically the crux of it, is that if you want, like the action that is regulated in any market is when fiat moves to crypto or when crypto moves to fiat. Once you're in crypto, it's sort of, Wild West in a sense, not entirely, obviously, but much more so. And so for us, it's been about trying to build sets of fiat on-ramps, ways of moving from fiat to crypto and back that are both maximally compliant and also maximally censorship resistant. That's sort of been the strategy.
Yeah, we often have this conversation, like we talked about at the beginning of the episode, where we're talking about distressed countries, how they get into fiat and how they make sure that they kind of like hold their value in assets that they have and the principle that they've gained over years of living. And but oftentimes that conversation is hypothetical. So I want to know, like, as far as the countries that you guys are in now, I know the app is geo-locked to certain countries. What countries are those? And then what does that look like on the ground? Like, what does adoption look like on the ground? We're always having that conversation, and literally it's always hypothetical. I want to talk to somebody that's in these countries doing boots on the ground work. Have you been to Venezuela yourself and kind of like went there and helped the adoption of reserve? And how does that look on a day-to-day basis when you're trying to push the adoption of not only Bitcoin, but also stablecoins?
Yeah, sure. So to give you a sense of the team and sort of the window we have into what it looks on the ground, and then I'll comment on some stuff we know around what it looks like to actually use crypto in some of these markets. So over half of our team is from Venezuelan at this point. So
oh, wow.
And they live all around from Venezuela, from Caracas to Colombia to Argentina and elsewhere, Uruguay. And so that's like been an immense resource, is that we've been really consciously hiring people for whom these issues are not like kind of intellectual considerations. That's a great starting point, but we've been hiring people where, their lived experience is, just filled with insight around, how these things should be executed on, how do you actually interact with the local regulatory environment? How do you establish trust in these environments? What sort of user experience do people need? How do you deal with counterparties who you are using as a fiat on-ramp? All of this. So I think it's like, we're very much into hiring people who are facing the problem really directly. So our team is sort of barbelled between a bunch of Americans that are more on the tech side or like, more familiar with the crypto ecosystem at large, and then hiring a bunch of people who are really intimately familiar with hyperinflationary environments. And so one of the cool things that I like about the kind of narrative of the project is that we think, we can draw on all of this social knowledge and sort of social technologies that have been developed in these markets and build something out of that is like, really like incorporates the wisdom that people have developed in living in these environments for decades, and then bring a product to a global market that sort of is tough enough for Venezuela. And so it's tough enough for, say, like Turkey or Lebanon or elsewhere. And so in terms of what it looks like on the ground, I mean, it's like exceedingly, I think it's pretty bleak. I mean, there's still like, I think still these places are like beautiful countries with like plenty of people living good lives, but there's definitely like, a huge amount of uncertainty and difficulties. You'll hear people resorting to make money in really strange ways. We spoke to someone who full-time was mining RuneScape gold, and they were just doing that on their computer because that was like the digital economy, like a small fraction of the digital economy in like the US or Europe or elsewhere, Asia, is like enough to, just playing a small niche role in that economy is more valuable than contributing to what's around you, just given the state of kind of disorder and, economic slowdown there. And I'm trying to think what other ones would be good to highlight here on this front. But I mean, basically, it's like a day-to-day consideration. Like people don't view the local currency in the same way that we do at all. It's not really a unit of account. They're basically, the local currency becomes this sort of almost like a goods and service food credit that you need to spend incredibly quickly, right? So it's like, no one's viewing it like, no one's thinking, like, it would be almost silly to talk about what the price of things are in any meaningful sense in the local currency. You see this in Argentina, you see it in Venezuela. It's a complete moving target. And so these are just, it's just you're acquiring local currency and then you're trying to find something to do with it immediately. And that's sort of like the daily struggle. It's like extremely time sensitive. And so the Reserve app is basically trying to play into that, where people are trying to acquire dollars often as like a savings tool. And so we're trying to give people a way to move into them in a way that's really secure and also really convenient, because you basically today have lots of people who are on WhatsApp, Instagram, or like on this, or just in like, you know, commercial districts buying and selling dollars all the time. It's just like a fact of life. And we're basically trying to streamline that process and make it as seamless as possible. So today that means if you're in Caracas and you want to buy RSV, if you want to save in dollars, you can basically through the app quickly do so. You can buy digital dollars and hold your wealth in it. You can on-ramp via bank wire. And then we've also rolled out, and I guess this is one thing we haven't said before, so maybe it'll be interesting to people. We have a cash-based on-ramp as well there too. So if you want to get like a motorcycle to come and collect cash from you and give you RSV, that's something we can do as well. So we're basically just trying to make it as convenient and seamless as possible to alleviate that stress of needing to find a safe place for your local fiat currency as quickly as possible.
Is there any hope for these countries to maybe have their local fiat currency kind of rebound? Like, that kind of seems like it runs up against what you guys are trying to do with RSV. I know you're trying to help in these countries, but is the eventual goal to maybe hopefully just move the entire currency and have it not be used in that country? Or are we looking for a rebound? And I don't know even what that looks like, to be honest. Is the peso ever going to come back in these type of situations? And that seems like it might run up against what you guys are trying to do with RSV.
Yeah. I mean, I think if you look at the history, it's there's a few different ways these things tend to go. So, you know, there's many Latin American countries that have dollarized completely. Like that's one sort of way out of this. And I think we would basically be front running that, you know, eventuality. And then there's, you know, the possibility of a complete political reset and then a new currency being launched. And so you've seen things like this in Brazil. They at one point reset their currency, moved from one to another, and really quite effectively managed to protect it going forward. And now the real is like pretty dependable currency, you know, relatively speaking for the region. But basically I would say, you know, and I don't want to like project as like an outsider onto, you know, what's going on there, because I think people there have, you know, better informed opinions than I do. But I think if you speak to people, there is a bit of a pessimism, and there is like a sort of fatalistic, like we're stuck in like basically a zero-sum game kind of equilibrium here. And you know, the government makes money off of seigniorage, off of printing money, and uses that money for political patronage. And then and there's very little reason to stop that. There's a lot of people who make a ton of money off of the current arrangement. Like if you have access to the printing press, even in a hyperinflationary environment, it's pretty attractive. And so, you know, I think countries all around the world are going to continue to grapple with this, just because like political institutions are not, you know, they don't have an infinite lifespan. They're not immortal. And there are countries all over the world that have been dipping in and out of these crises forever. And so I'm always rooting for any market we're in that they resolve it. And it would be great if we were part of the solution, but we're not particularly worried that these problems are going to go away or something. You know what I mean? It's not, it's just not like we think, oh, it's going to be solved and then there's no need for RSV. It's like, if it's not Venezuela today, it's another market tomorrow. There's always going to be places like this. And lots of markets exist in in-between states where they're not, you know, full on hyperinflationary, but they're like, kind of have a deeply controlled economy that's barely kind of staggering along one way or another. And there's lots of examples of places like that too.
Yeah, absolutely. I agree with that. A lot of these places, they'll have, like you mentioned, like pretty much these vouchers, right? That you have to spend because otherwise they'll lose value because of the inflation that's going on there. Well, we know one thing: the velocity of money there moves quite a bit.
Hmm.
So the velocity of money is high there. So, but that's not necessarily, essentially a good thing. Q brings up a good point. We've had a guest that talked about, kind of like this. Theory of dollarizing, right, these countries, which is kind of like gets into this area where it's like, well, you know is it ethical, is it not ethical? There's many different things about it, because it's kind of, if you're thinking about, if we have Latin America that covers in dollars, then we control the monetary system, right? We have the print and press, and they have their own fiscal policies and all these things that kind of might be conflicting with the monetary policies that we have for the dollar. Kind of stuff we see with Europe that's going on. The European Union is struggling with a lot of those things. So be definitely interesting to see how that is going to play out. But COVID, and all these things that's happening right now in the economy, it's interesting that it's kind of pushing more people into dollar for safety, right? Because those economies are struggling. So you guys have seen, overall the demand pick up on your end as the global crisis kind of started. How was it before? Did you guys see the demand before, and did you see a quick escalation of demand from those countries, or how did that work out there?
Yeah. So we definitely, I think, so in the crypto world in general, we've seen the kind of crypto dollar thesis playing out in a big way. There's a bunch more demand for stable coins. And then for us, we've seen the same thing. I think for us, we're right now in a stage where we're really trying to build the perfect product that we think we can bring to, lots of these markets and scale up. And so it hasn't been our kind of intent to like capture as much as humanly possible right now, because what we want to do is we put on a like kind of sustainable trajectory where we have a service that people really like, and we feel good about scaling it, and we're getting, I think, pretty close on that front. But yeah, definitely we've seen more interest, and I think like the stablecoin numbers and on the kind of macro level speak to that. And yeah, and on the kind of like ethical side of this too, I think, just to comment on that, like the you know I think what the stablecoin story can do, in the best outcome, is it sort of takes, currency. I think this is what crypto should do in general. It moves currency from being a sort of, something that's provided by a monopoly to something that's, a product that's user driven, user focused. And so for us, like, we see that Venezuelan people in other markets want dollars. This is what they want to save in, and the existing fiat currencies don't serve them. They serve, the people who are able to print them, basically. And so, but then I think it does raise the question of, like, there is currency is linked to power, and that, the dollarization path is unappealing to a lot of countries, because then you suddenly are in many, many ways linked to the US. So it's not just that, if the US decides they're going to inflate their currency, that you're kind of stuck on that boat, but it's also that, your linkages with the US banking system are now dramatically tighter, and their ability to levy sanctions against you is much, much more. But I think the way we look at it is that we're currently approximating a dollar peg because that's what people want, but we're not wed to it forever. That's really the thing, is if the world shifted and suddenly people in our, our target markets were like, we really don't want to be using the dollar at all, we're not looking to enforce that as some kind of it's not like we're happy to do it. I think I would like if the interests of the US government and these people were aligned. That'd be great. If they weren't, and people, then they could, first of all, easily exit reserve. It's not like an enforced monopoly. And then also, we can change what we peg to, if that's what users want. We think for the foreseeable future, it's a dollar peg is what people want, but we're not wed to it.
Gotcha. Yeah, it's interesting. You mentioning that the print and press in those countries, that the governments abuse it. For my country in Ukraine, I'm definitely familiar with that, because we have a basically systematic corruption there that has been going on forever. And actually, if you take out that systematic corruption, the kind of country kind of collapses, because it's not structured that way, which is interesting. Everybody talks about how we should stop the corruption, but In those countries, it's actually the way the system works, and it really has to go through a hardship if the systematic corruption is taken care of. But I like what you mentioned in terms of you basically just have a product that gives an option to people, right? They don't have to buy it, right? They just have an option if they need to. They have the capability to kind of on ramp into the stable coin, maybe for the moment being, while things are uncertain, and the options there. Now, speaking of interest, right? So we're seeing a lot of these CeFi, DeFi platforms, right? So if I buy Reserve, compared to me buying USDC, where I can put USDC into a lending platform like Celsius or BlockFi, I can start earning interest on top of my dollar that I have. Is that something that you guys are thinking about? Have you thought about it? Are you going to have that down the road, or where do you stand on this?
Yeah, it will. It will come. It will come, and it's something we're actively pursuing. So it's really just a matter of sequencing. Like, what's the priority today? And today we think the priority is, onboarding a bunch of new users into crypto who are in the RSV world, and then the amount of leverage that we'll have as a project within all of these crypto service providers gets way larger. So it's always like, so it is something we're looking at, and I think it's something that probably isn't too far away either. But it's always a matter of sequencing, and it's like we could spend a huge amount of time talking with BlockFi, or we could basically deliver a big win, and then we can walk in and they'll be like really eager to work with us on it immediately. So that's kind of like, it's a sequencing question, but I don't think it's far away at all. And one cool thing that we have as well, like a mechanism that we'll be deploying at some point, is that we have unlike other stable coins, there are some like Maker that has this, but we have a governance token. And so that gives us a lot of interesting options around incentives, right? So like we can give people RSR to distribute RSV, which is something we've done. And we can even give people sort of an RSR interest rate, to RSV holders. These are things we can do outside of, the more typical interest-bearing stablecoin account.
Yeah, I'm glad you brought this up, because back earlier in the episode, and we're like 40 minutes in, so we definitely have a ton of questions and I want to get to them. But back early in the episode, you talked about the decentralized governance that's happening now, and maybe it not being very, I guess, efficient, and it kind of being a meme word at this point of how does this actually work, right? You see foundations kind of forming into DAOs, and it's become kind of like the topic of the week, right? We're launching a governance token, and you see it go 200% on Uniswap, and it's just kind of the meme of the week. So I really think it's like a pragmatic approach to not have any utility out the gate with this governance token, and try to figure this out and try to figure out what you guys are doing with it. But I kind of want to touch on that little piece that you talked about. As far as decentralized governance goes, who's doing it well, who's maybe not doing it so well? What kind of led you to that statement earlier in the episode of kind of it being not where it needs to be right now?
Yeah, I mean, I honestly would say I don't think there is an example of it really being done today, sadly. I do want to say too that our conservatism on this topic is partly because the users that we want to cater to are ones where we can't afford to experiment with like a sort of more like unproven governance method, right? So like if I were to say someone who's doing it well, I would say they're not in crypto, so it would be like Telegram, the chat service, has like a really pretty impressive governance setup. So basically all of the like kind of private data that they store is split across many different servers across a host of different jurisdictions, and you have to get a majority of them to basically undo the encryption that things are sent through on Telegram. That's like my rough understanding. And so we looked at them as being like a pretty interesting example of kind of decentralized governance done well. And it's not, and we have a term that we use internally that it's more about like a minimum viable decentralization, and not, about being maximally decentralized for, just for ideological reasons or for whatever else. It's about being decentralized enough that we can cater to the use cases we want to and maintain the sort of like regulatory exemptions that crypto is given. And so, yeah, so I mean, like really like, Bitcoin is well governed because it's really conservative about its governance. That makes sense to me. And then, on the other front, like, are there some that are interesting? Like Maker, it's kind of interesting. I think they're definitely endeavoring to build that community, and it's like I'm glad people are doing it. And I think it makes sense given that most of the people using Maker are, crypto speculators. And so I think you can afford to take more risks with your governance in that case. And I think it's been good, but I think though, when you look at the details, it's like the like Gini coefficient of MKR holding is like really skewed, right? So like there's immense concentration among big holders, and that sort of makes the governance system more like kind of democratic in principle than in practice. And of course that actually probably makes it more workable at this time, right?
Mhm.
But yeah, so I don't actually think there is, as far as I know, I don't think there's any crypto project that's really pulled it off. I think groups like Telegram point to the future potentially, which is like, for us, like the sort of things we've toyed around with internally around governance, and is like things like that, like having a few designated governors that are split around the world, that make decisions. We've thought, doing things like we sort of, the core team suggests changes, and then some subset of token holders can say yay or nay. Like, but it means the attack surface is smaller. No one can come in and suggest something ridiculous. That's one method. Others, let's see. Yeah, others are basically just being transparent, because I think in some ways, like, crypto offers the benefit of potential decentralized governance, but it also has the clear benefit of transparency. So like if we're making changes, they just all get communicated well in advance of the changes being made. That has a lot of the benefit of, I think that achieves what our users want without getting into the sort of big mess of opening up the protocol to outside attack through a governance process at this time. That's kind of how we're viewing it.
Yeah, definitely. You guys kind of have a larger responsibility as far as your users not being primarily speculators, at least in
Right.
theory. So yeah, I appreciate that answer. So I want to talk Bitcoin a little bit. It's gone through many narratives at this point, and one of the narratives was that in distressed countries, and we see this from like a local Bitcoins and things like that, but users kind of fleeing into Bitcoin, and that was going to be what really drove mass adoption. It was going to drive value up, is just the entire world adopting Bitcoin. But now stablecoins kind of came in and stiff-armed that Bitcoin narrative aside. So where does Bitcoin live now? Like what is the narrative now, and where do you see Bitcoin now in 2020?
Yeah. I mean, I basically, our team, like, we're very much building in like this sort of Ethereum world, leveraging the developer tools that have been made there, where we get our consensus from the Ethereum main chain. But then we also, because of the go-to-market efforts that we do, it's given us all, I think, a pretty significant amount of respect for Bitcoin. Like, I think Bitcoin is like just by far and away the best thing in the space still. Like, I think there's like great things going on in DeFi and Ethereum, but a lot of what makes Bitcoin so good is the stuff that doesn't really make for an easy like headline or like, an easy tweet. It's like the fact that you can go to Lebanon and you can find a group of like 200 people who are running a sort of informal like cash to Bitcoin network, where you can essentially, like, there's nowhere else in the world where you can show up there's no other coin where you can show up in any given country and suddenly be able to trade it for cash. Like, that's a wild liquidity advantage. Like, stable coins have definitely taken a huge chunk out of Bitcoin in the exchange world, where it just makes much more sense to trade an altcoin against Tether than it does BTC. It's like just the kind of mental calculus of thinking about sats versus the altcoin, and they're both fluctuating. It's terrible. It's like a terrible user experience, in my opinion. But and I think the market reflects that. But yeah, I think Bitcoin right now, it's like, when we think of those design considerations, it's basically just optimized for being maximally censorship resistant, maximally reliable, maximally predictable in its monetary policy. And I think that makes a lot of sense. I mean, I can't tell the future, and I don't, know, where it will pan out, but I think I think it basically is, I think the digital gold narrative is right. I think it's gold, but it's like much, much more liquid. And, it's telling, like, I was in Istanbul looking at a bunch of like crypto OTC activity there. And if you go to the Grand Bazaar in downtown Istanbul, you'll see like lots of gold stores selling like, precious metals and different foreign currencies. And in those stores, you can go and you'll also see people selling Bitcoin OTC, you know, like they'll like pull out a Binance app and they'll send you Bitcoin if you ask. And I think that's just really telling that it's like it's actually being sold alongside gold. It's being adopted in lots of these markets that need a safe haven. And so, yeah, local Bitcoin volume is one thing we always look at when we're looking at new markets. We see Bitcoin as the sort of like it's not perfectly optimized for a bunch of different use cases, but we see it as being like a trailblazer. We kind of look at where is Bitcoin getting, like, despite the difficult UX, despite the like immense volatility, you know, where are people using it anyway for the purposes of a safe haven? And then we kind of look at it as like, can we kind of have a symbiotic relationship with Bitcoin where, you know, users want RSV BTC liquidity, yeah, so we offer it, and so we think wherever Bitcoin has, like, you know, paved the way in some of these markets, that's where we want to be as well, and just be a bit more tailored to the end user's needs than Bitcoin is.
Gotcha. Yeah, we've seen a surge in Bitcoin ATMs, obviously, across the world. That chart just, if you ever look at it, you know, that thing just goes vertical. It's very interesting. Yeah, and I'm all for, obviously, more onboarding tools in these countries, because, you know, often we'll talk about, hey, you know, if the narrative is there for that digital gold, then the countries that need it are the ones that are distressed, and there's no onboarding there. So the demand that should be coming into the BTC is really not coming, and a lot of it is kind of the speculation that's driving the price. But hopefully we'll get, you know, that demand on board, and it'll start, you know, driving the markets accordingly. So kind of want to zoom out a little bit and like talk, you mentioned, you know, interesting stuff that's happening on Ethereum, you know, DeFi, for example. So, you know, what are your thoughts overall on DeFi right now? It's obviously, you know, crazy stuff kind of going on there. There's a lot of experiments that are being done. You know, some things that are being done kind of, you know, on the safer side. Some are more risky. You know, everybody's chasing the yield, and everybody's doing these loans, borrowing and lending, and this basically creates this credit markets there that everybody, you know, a lot of people are kind of worried about. If, you know, if volatility picks up, then we might have the unwinding that happens from the DeFi credit bubble, and that can spew into like the market overall. What are your thoughts about like, you know, the current state of DeFi?
Right. Yeah, I mean, I'm overall excited about it. I think it basically, yeah, it's allowed crypto to lean into its edge even more. Like, it's for, like, if you want to do a capital raise now, all you basically need is a programmer who has a website, and then they can deploy onto Uniswap, do a sale, raise, and execute. You know, it's like, it's crazy. Like, because we did the IEO through Huobi, and when I think about how much of it was a good process, but it was just dramatically more like of a, you know, onerous process than doing a Uniswap token. And so it's really interesting that it's completely streamlined that process. It's almost like the 2017 kind of crypto wave, but like, you know, all of the superfluous, like, sort of meat space pieces have been, you know, taken out, and now you have this like incredibly streamlined fundraising process. There's all kinds of problems, you know, around, like, you know, it being really easy to launch a scam token, like even more easy than it probably was before. You know, we'll see if it ends up panning out that way. Maybe it won't. But so I think that's an issue. But yeah, I mean, I think you just can't deny, you know, that's like it's pretty amazing that they basically, you can almost fully automated do a fundraise and launch a token without interacting with any person. I think that's pretty incredible. And then the like sheer liquidity growth on like Uniswap and the other dexes that are cropping up, I think is interesting. And I think yeah, Uniswap has now like captured like the sort of 2017 style excitement. And that what we've seen too is that is, even if that's passing, even if a lot of those projects don't end up delivering value, there's an enduring liquidity advantage that like a DEX that captures that excitement will have. So it's like, why is Binance like this tool that's used internationally for, like, you know, all kinds of financial transactions? It's because it was like the shitcoin palace, you know,
Yep.
for years, right? Like, and so then it actually inherits all these benefits around liquidity. And so I could see someone like Uniswap or something coming away as like a really big winner. And it's no wonder that everyone's launching a DEX now, because it could be in the future we have like a Binance equivalent DEX. You know, there's a Huobi, there's an OKX, there's a couple, and they're all battling. I think that's conceivable. It probably will play out a little bit differently than the centralized exchanges, but yeah. So I think it's exciting. I also think, just from a reserve perspective, we think that our user base is like, once DeFi matures a little more, they're the natural users for this outside of crypto speculators. So if you think of like, if you hold cash USD in Caracas and you want to get interest on it, it's basically impossible. If you're holding RSV and you want to be able to get interest on it, you know, doing it through like Aave or Compound makes a lot of sense. And I mean that, and you know, basically people there hold the dollar as an investment asset as is without expecting any interest. And then imagine if they can basically hold this super dollar that is sovereign and they're getting interest on it. Like that's pretty appealing. And you know, in addition, like as the sort of Uniswap world matures and there's some kind of safer assets, it means that if you're holding RSV, you could invest in a bunch of other assets without going through any sort of KYC AML process, without interacting with an intermediary that views like some of these markets as high risk and doesn't want to deal with them. So I think like the emerging we think, you know, the emerging market DeFi thing, you know, is something that will be, you know, it could be a source of enduring growth for that space. For now, it's not going to be the focus probably, but it could be in the medium term.
Gotcha. Yeah, and especially right now, in a world where we have, you know, almost zero interest rates everywhere, you know, things like that, like decentralized, you know, like say Maker, and you know, the ability to earn interest that's way significantly higher than they offer, you know, at banks and so on, can be very attractive. For some of these stable coins, and even, you know, even depositing like something like USDC or something, you know, like that into a CeFi platform like Celsius or BlockFi, that offers you, you know, a significant percentage APR above, you know, the rates that they offer in banks. But what are your thoughts in general, you know, about this? If we do see, you know, stable coins continue to pick up in interest, more people are going to be piling into them to maybe capture the interest that is available there, that is not available in traditional finance. And meanwhile, these, let's say USDC, they have to hold dollars in their bank account. And if we do have negative rates, then they're going to end up actually paying, right, for the dollars that they're stashing there for the people that are buying USDC. Do you see, you know, any conflict that's going to arise there, you know, for those that do provide the USDC service and have to stash that cash? For people who see the interest rate drop, or what's going to be like kind of the reaction?
Yeah. So I think there's like two things going on there. You know, the interest rate you receive on holding USDC or like TrueUSD, in some cases there's an incentive paid by the token issuer, but a lot of the time the interest rate stems from just the demand that speculators or funds have to get their hands on some USDC to start trading on leverage. And so I think that like the negative interest rate environment maybe could even just be beneficial for the interest rate a stablecoin holder has, because basically there's so much capital seeking yield, and in a negative interest rate world, there'll be many people who will engage in much more riskier investment activity to try to, you know, break that. Like you'll see like in Japanese FX markets, there's lots of people who trade on crazy leverage because they're used to being in this sort of stagnating state where there's not a lot of yield you can get. And so and you'll see, and so there's a kind of gambler's mentality that can crop up out of that environment. So it could in a way be beneficial for stablecoin interest rates, or at least for like demand to trade with them, which you would think would be correlated with the interest rate. And then on a kind of token issuer side, like, so they have USD holdings in a bank account, and a negative interest rate environment could present issues for them. I think what you'll probably see, and I'm not on like the inside of like USDC's treasury management or anything, but I think many of these guys already hold like US treasury bonds and stuff. They hold other assets. And I think you'll just see more of that. And so, I'm not like envious of them, you know, in being in that position. And kind of what we like too about what we're doing is we can rely on the good work of like established companies that are trustworthy custodians and, you know, good at managing those sorts of issues. And so we see all those companies that are doing asset-backed tokens as a partner, and we definitely hope that they, you know, continue to thrive and figure that out. And yeah, so I would think probably USDC will just have to be more creative with their treasury management, which hopefully doesn't increase the risk profile of that too much.
Gotcha. Okay. Well, Charlie, this has been a great episode. We have a couple more questions because we're kind of running up onto that
That's
hour.
fine.
You talked earlier about maybe not being married to USD in the future, and while that can kind of get into like a dystopian mindset of like what actually happens if USD collapses, or maybe not even collapses, but kind of loses its world reserve currency status. I wonder what you make of competitors like the Yuan or Libra even. What does the future look like? Is that actually like tangible for people to say, hey, within the next 10 years, USD might get overtaken by a Libra or by the Yuan, if you see that? So I wonder what you think about that, and what does that future look like? Is it tangible, and what does it look like when that does happen, or if?
Yeah. Well, I guess maybe let's start with Libra. I think on that one, I would be quite surprised if that ends up being like a major USD competitor. I think that there's a bunch of challenges on that front. I think first of all, like nation states make for better like currency issuers than like companies regulated by them, I think, in general. And like like for Libra, like you've seen, like there was all this excitement around the launch, and it could come back, and maybe we'll all be talking about Libra again in a few months or something. But it seems as though basically they've basically said that we'll do whatever the regulators say. We're going to be like completely compliant. We'll let you guys in shaping what this is, and it suggests to me that it will end up being shaped into something pretty innocuous. So like it will be that every wallet address that holds Libra has to be KYC AML. It will be like a PayPal, and it's like PayPal didn't really become a dollar competitor at all. It just, if anything, it increased dollar hegemony, right? It became like an amplifier of dollar adoption, because now you have lots of people, especially again with this emerging market narrative, you have lots of people there who have money in PayPal. They get paid from abroad and they're looking for ways to cash out. So PayPal kind of becomes like synergistic with dollar strength. And I think Libra is probably on track to do the same thing. I've heard that they are maybe moving away from the sort of like hybrid basket to just issuing a bunch of different Libra coins that are pegged to different assets. So that suggests to me that they're probably just going to be part of this, story of like dollar strength rather than against it. And then as for like the Yuan and like a kind of post-dollar world, it's definitely it's like one of these giant topics that's like really hard to like have a high conviction prediction on. But I mean, I guess basically like it tends to correlate with like geopolitical power, and if a country like China is becoming increasingly dominant, if their like domestic market is demanding a lot of goods and people are forced to transact with yuan, then you'd expect it to be adopted more broadly. If the U.S. government becomes a less reliable provider of the dollar as a product, like if the Federal Reserve becomes more politicized, that would be like another, that would make people look for other options, and the yuan could be one of them. But I mean, I'm not convinced that it's like an imminent issue, because I still think like you look at where like some of the Chinese elite, what they're doing with their money, a lot of them are parking it in like LA and Vancouver. People are desperate for dollars. Tether and stablecoins today are used predominantly for capital outflow out of China. It's not like people are trying to sneak money in, or like, and no one wants a yuan stablecoin yet. I think this is the sort of thing that would be brought about by like a acute crisis, like what caused dollar hegemony in the first place, like basically World War II. And it took like the world consciously aligning, and deciding that they were all going to leverage the dollar, and the US was something like, some immense percent of global GDP. And so it just made sense that if all business dealings are done with the US, then the dollar is going to be dominant. And I think it would take probably something pretty big to shift people over. I think like the dollar is pretty entrenched. And I also think that stablecoins potentially are a story about dollar maximalism, potentially. If there's no crisis, and if this is the equilibrium we're in, then stablecoins just make dollars more accessible. And it could be that you entrench them, it gets more and more entrenched. So, anyway, I don't know the future on this one, but I basically think that I think there's a world in which like all of this plays into more dollar strength. I think that is possible, but a crisis would kind of derail that.
Yeah, definitely. And that's an amazing answer. So we've made it to the end of the episode here. We have one more question, but before we get to that, like pretty much standard question that we ask every guest, did you have anything maybe that you wanted to talk about and maybe share with your community or share to the broader community about maybe something on the roadmap, anything from Reserve that we didn't touch on, or else we'll just move on to that last question?
Sure. I mean, yeah, I don't think there's anything I want to say really other than, appreciate the continued support from the community. And we have a lot more in the pipe, and we tend to stay pretty quiet about what we're working on because we, actively don't want to give away too much. But there's more in the pipe. I think like there's plenty of reason to be excited about Reserve. So that's all I'll say.
Awesome. Last question. Book recommendation could be non-crypto or crypto. What do you got for the listeners or viewers out there as far as a book goes? Take your time.
Maybe I'll just list a few people. Probably I'm going to list a few just for the hell of it. I feel like I'll cop out and hedge my bets here. I would say if you're looking for something on kind of the like philosophy side, like kind of especially like ethics or moral philosophy, which I feel like is a sort of underrated topic probably. And I think crypto people as well should probably remember its importance. I like Alasdair MacIntyre, After Virtue is really good. If you're kind of like, especially if you're in crypto, you're trying to build sort of ethical communities or communities with like a shared ethos. I think like that's a good touchstone. It doesn't hurt to read Tolstoy. That's always good. So really, jump in there, like dig through War and Peace or something. That's always good.
This is gonna take 24 hours to put out. So within that time, if you got any, like, shower,
I'll say one other one.
Okay.
One other one too. If you're looking to, I think like get a really crypto-friendly take on like emerging markets and development, if you read like Hernando de Soto, The Other Path, that's a really cool book. It's basically like a kind of fundamentally like liberal conception of economic development. And it's all about the ways in which kind of the law and the economy in some of these markets reflects a zero-sum game where people are boxed out of economic opportunity because of the interests of like a small kind of urban elite. And that, a lot of the crypto story, I think, is like offering a new set of norms, a new set of technology that sort of can allow people to exit that. So I think that's a good one if you're looking for like a sort of like if you want to understand Reserve's view of development, I think like The Other Path is a pretty cool Hernando de Soto's one to look into for sure.
Awesome. Amazing. And we'll have all the links to Reserve and to Charlie's kind of Twitter profile, social media in the description, guys. So Charlie, this was a great episode. We loved what you guys are. I don't say this often, but we appreciate what you guys are doing on the ground in these various countries. So a great episode. We'll have you back here in 6 months' time, sometime around then. But honestly, thank you so much.
Yeah,
thank you, Dimitri. It was fun. Yeah, thank you. Thanks for having me.
Hey guys, we hope you enjoyed today's episode. Make sure to check out Layer 1 on all the audio and video platforms listed in the description. Thanks for stopping by, and we'll see you next week.